Hi, and welcome back to Beyond the Cards, your favorite show where we talk about the payments news you want to hear most. Uh, we are back in the new year, guys. Happy New Year.
Happy New Year.
Happy New
2025.
Year, 2025.
I know, so exciting. We did what every European company does, which is stop working. I think many of us enjoyed a very long break. So if you missed us last month, it was because we were being good stewards of our mental health and taking time off. But we're back and we're ready to talk. We've missed each other a lot. So, guys, are we ready to jump in and start talking about some fun stories?
Let's do it. Let's go.
All right. So, our first story comes to us from FinExtra, and it's pretty interesting, right? Barclays Bank in talks over giving away 80% stake in the merchant acquiring business. This really came as a shock to me because I feel like if you think of established UK players who are also just major acquirers in Europe, you think Barclays. It's wild that they would be looking to sell off or spin off their acquiring business. Have you guys heard, at least like on your guys' end, any like big concerns from merchants? Because this is the kind of thing that kind of stresses merchants out when companies start spinning off their payments divisions and it, you know, goes to being ran by somebody else. And does that mean that the new owner wants to change a whole bunch of pricing?
Yeah, I mean, you make very good points, Dan. So, on your first question, I haven't heard of any concerns from merchants yet, and I don't really know. I wonder actually where are the reasons behind? Is that pure profitability strategy? Is there anything else that we don't know? Because indeed, as you said, Barclays, when we think about UK acquiring, Barclays is definitely there, probably with WorldPay as their main competitor. So giving away one of their main businesses is surprising. So yeah, I don't know. I don't know what could happen after that. Um, what the article says is that this is mostly due to competition. So competition, they mentioned the Adyen, Stripe, and so on. But it makes me think a bit like what we've seen over the past few months about Worldline as well, which is struggling and trying to refocus their business. So probably the same trend. I'm not sure it's the best timing to sell business. That's why one of the reasons why I was quite surprised. But yeah, interesting.
Well, they wrote the business down by 300 million GBP. That's not a good sign of the strength of their merchant portfolio, I would wonder. I'm wondering too, like, because maybe COVID had something to do with this, especially with some of those like those prominent airline failures that went out of business like basically overnight. I mean, when a merchant goes out of business, right, it then becomes if there's not enough money in the liquidation of the business to cover their outstanding debts, like the acquirer has to cover all of those losses. So I'm wondering if they had a few like really serious losses in their portfolio that's driving some of the write down of that valuation, but also making them maybe shift away from the merchant acquiring side and saying, hey, if these other players want to take on this risk, perhaps it is the world of Stripe and Adyen and Dojo, which I'm not familiar with, to take on this business.
My question is, what's their plan for the 20% they want to keep? Is that just to, I don't know, have some skin in the game still, or use that for some type of influence? What do you guys think? Why wouldn't you just,
Sell it all.
Yeah.
My 2 cents is, Barclays also has cash management services. It's a bank. So my guess is that they have some large banking customers that also use the acquiring side, and that they're probably trying to package and keep that in their 20% stake.
So they
that
might
way
kind of pick and choose their portfolio they retain a little bit.
I have to assume that's how it goes.
Yeah.
I don't think they cut a chicken's head off and have it run around a board. That would be my only guess, is that those are strategic banking clients that they're keeping in that 20% stake. Wild. I think we tend to think of Europe as the land of stability. Maybe not so much in the new year.
Yeah, I think. Sorry, but yeah, I think there's something that could change, and also impacting the acquiring business. And as you said, then let's see if pricing and even the new onboarding rules for merchants will change, and maybe there will be some merchants being kicked off by Barclays because they are considered as risky going forward. So yeah, there could be some changes.
It's definitely, I know Jasmine and I have some recent experience with that, right? It is never a fun situation to be in when your acquirer for several weeks is sending you concerning emails that seem like they kind of would like you to leave them. And they just don't ask or say it out loud until it's like, hey, actually, you only have 30 days to leave us, so we actually need you to leave us now.
Exactly, and it's not a good ideal for anybody in that transition, right? It's very, very stressful. Like Dan said, by experience, it's very, very stressful when you're like, oh, trying to negotiate staying somewhere when really and truly it's like, okay, no, we don't.
Yeah. I'd imagine just even that article would send probably shockwaves through their portfolio of merchants being like, well, maybe it's time for us to consider leaving because we don't want to be left holding the buck. Very interesting.
More to see.
Yeah, definitely. I'm sure we'll be hearing a lot about it from our UK folks. So continuing on the theme of disruption, our next story, also from Finextra, Norway's Vipps launches world's first Apple Pay rival for iPhone. So this is really a kind of continuation of the regulators in Europe really coming down hard on Apple and forcing Apple to open up its walled garden. And one of the areas that the European Commission has, particularly targeted on Apple is their NFC chip technology, which has primarily only been available for Apple Pay. They've really forced them to open that up to third parties. And this company is claiming, unverified claim, to have created the first essential new wallet that is not Apple Pay available on iPhones.
Yeah, and I think this is a great news, and this is also quite exciting in Europe. I would say for the first time in a few years at least, they've had enough courage to challenge one of the big players. They did it already somehow with the interchange regulation, but never with the schemes. While here, I would see Apple more closer to Visa, MasterCard, sort of speak when you have to challenge someone that has really global power. So yeah, challenging Apple here and forcing them to open their system to other technology, other providers to create their own apps is very good news. So I don't know if this is, I believe it's the case in the US, but here in Europe, I think Apple Pay has become like used everywhere, and it's no longer a matter of young people or medium-aged people. It's really everyone, even relatively old people use Apple Pay. So it's good that the Nordics have started to create this sort of solution, and hopefully will be followed by many other local solutions across Europe.
And it's very surprising to see that Apple agreed to that because, you would think Apple is kind of selfish with, trying to keep everything like no iPhone, Apple. So it is interesting to see them branch off and allow someone to come in with another solution for Apple Pay or Tap to Pay outside of Apple Pay. So it's good to see that because if not, you have to go through other avenues to do a Tap to Pay, right? It's not on Apple. For instance, Walmart Pay, it's not on Apple at all. Google Pay, all of those. So it's interesting to see in that because Tap to Pay is becoming more and more common. Like I use it all the time. I hate going to a store without they don't accept Tap to Pay. So that is an interesting and a great move for Apple, I believe, to me.
Well, Vips is the largest payment application in Norway. So it's very interesting. I mean, I think it's, it kind of feels similar to like WeChat in China, but for Norway, right? It's kind of this super app that makes it super easy to transfer money, buy things, sign up for things. Um, so it's kind of seems like it has that like broader reach into at least Norway specifically. And so, you know, it's kind of like makes sense, right, that Norwegians would use that same payment app to have like the NFC technology in their phones, where they would have been previously prevented from being able to do that. So, I mean, it drives a lot of competition in the mobile wallet space. I wonder though, like, because I think of this as like, is there like a point where there's too many mobile wallet applications? Like it's good that there's competition that's driving. And I mean, I think we could all say that perhaps the monopolistic approaches of wallets has been stifling competition, right? You had Google Pay, Apple Pay, and basically PayPal, right? In the US, we have Pays, which is trying to steal some of that thunder and get in the mix too. But I kind of think of it as like the streamer wars, like where there's like Hulu and Netflix and Paramount Plus and Max and Disney Plus, right? Like there's so many things that like is it going to become a situation where there's now 50 mobile wallet apps to choose from that can leverage this technology? And as we know with the world of fintech, uh, is that necessarily a good thing, right? Like, does enough red tape exist that blocks or inhibits less than savory players from getting in this space?
Yeah, that's always the question regarding this ecosystem, especially with the competition, and with we also may attend to see we can expect to see also multiple super apps as you mentioned, and we'll will obviously reach a limit and see some firms that will also do not reach their goal also, and many movements. But at the same time, we have to keep in mind that it also brings competition to the card also. So that's what is interesting, especially in Europe, where localization, where local markets are extending also. So this is something interesting to see in the future.
Yeah, I feel like things will be a little bit safer in Europe, but then I like worry about the US where it's going to be like what's going on with these all of these different mobile wallet applications, like how do you attract users from established players, right? Like you have to have some sort of incentive of like, why would I use, you know, Dancy mobile wallet to pay people, right? Like, are you getting cash back? Are you getting some sort of rewards or discounts or whatever? Um, you know, how do you drive traffic to those new wallets without some sort of incentive? And I think it's the incentive side of the piece that I get a little worried that there's ripe for consumers to be put at risk. But I'm a worrywart, so. All right. Well, now my other favorite topic in the world to talk about, which comes to us from Payments Dive, is Visa starting to enforce the surcharge program. I think especially in the world that Chelsea Jasmine and I work in, where, we're constantly having conversations about should merchants surcharge or should they not surcharge? you know, we tend to not see it in the bigger players, right? Like your big box stores are not surcharging. We tend to see this more in really the B2B space where, it's a lot more expensive cards being used. But, I think we all run into surcharges from, let's say, small merchants. Typically, like the place where you get your hair cut might start throwing on a surcharge, or your local convenience store might throw on a surcharge. But I would say a lot of people do not surcharge properly.
Agreed. I think we've all even come across them. I had to pay a contractor and I wanted to use my credit card and it was 3.5%. I was like, do I tell this person they're out of line or do I just choose to pay with a check, which I did? But that seems like that's who they're probably going to start going after more so too, is just people who are not following the actual protocol. It was a bit of the Wild West for quite some time. I don't even think, there was much enforcement or checking or verifying. And now it sounds like they have these secret shoppers. And I'm sure there are people, we've known that we've reported folks, or there's people who will report companies that are charging in excess of that regulated amount. But I think we'll see more of it as more companies take on surcharging as a means for offsetting the other topic, which is always the increase in rewards business.
Yeah, I mean, I see Visa stepping up enforcement, right? Visa is clamping down on a lot of like authorization misuse. They're clamping down on just a lot of, not so good data on their auth network, right? I definitely see them cracking down on this. Now, typically they don't, at least the way that we've not seen the immediate knee jerk of it's an immediate fine. It's usually a warning and then typically fines that come in afterwards. But I think, especially areas that are ripe for surcharge misuse is the world of embedded finance. Definitely a lot of these smaller players. And I think the only reason why we don't hear a lot about surcharging in the news, particularly, is because people really don't know what the rules are supposed to be.
I was just about to say that. I don't think a lot of people know what the rules are. So there were, a lot of merchants that were kind of getting away with it. And the consumers kind of really didn't know what to do, what to say. And didn't really understand what they were getting charged as well. Right. Some merchants tried to hide those surcharge and fees in other ways. So when they start being noticeable, they got in trouble. Like Chelsea said, I went to a few places and I actually spoke up. You're not supposed to do this, right? I'm that person.
Me too.
I'm that person. Like, no, you're
It's mad because it was like this little construction guy, and I was like, "Oh, dude, I am not."
You should have paid him with a debit card, Chels.
right. I definitely do it at these restaurants because they will try to just get overboard with it. And I'm like, no, you're not supposed to do this. And they're like, well, yes, I am. No, you're doing it in the wrong manner. And plus, your percentage is way too high. So either you want to fine or you can not charge me. I got away with it.
I know. I'm so that person too, where I'm like, I tend not to try to do this because I don't like to, but I will just like look at the person and I'll be like, you do realize that I'm an expert in this space. I've worked in it for over a decade. I know all of the rules inside and out, so you can either go get your manager and we can talk about this, or I'll just report you.
Yeah.
But this is where, like, in my own personal experiences, this is where I've typically seen merchants out of compliance. One, they're like, their managers get told if someone's paying by card, you surcharge them. They're not saying don't surcharge somebody if they're using a debit card, right? And I've definitely been like, oh, there's a surcharge on credit card. Okay, well, I'll just pay with my debit card. And the associate has been like, oh, I'm sorry, it's a fee on all cards. And I'll be like, well, no, this is a debit card. It's not allowed on this. And they're like, well, my manager told me to do it on all cards. So there's clearly a misunderstanding there. And I do know that that is one area that Visa is very strict on when it comes to surcharging is if you surcharge a debit card, you should just expect that they are going to come for you at some point. They're very strict about that. They're also very strict about making sure that the receipts are properly identified. But the other area where I see people try to circumnavigate surcharging is they go, oh, well, I'll just add a convenience fee.
Yep. It's either convenience fee or a service fee, and those are way higher. And it's like, wait. No.
Yeah, and it's, okay, like Visa and MasterCard have very specific meanings of the words convenience fee and service fee. So you can't just interchange them. And so I don't even see it as just Visa necessarily cracking down on surcharging altogether. I think Visa tends, when they try to do these enforcement efforts, they're also going to go after everybody who thinks that they can get around it by just adding a convenience fee or saying, oh, we'll call it a service fee instead. Visa's going to send in a secret shopper who's going to interrogate you at like the point of sale or write an email or something and get you to fess up to something, and then you're going to get a warning.
And you don't want that fine because what I've seen mostly is that the service fee is way like 10%, 20% because they're trying to get away. I'm like, I know what you're doing. But you can't necessarily do this. So it's like, especially like I said, with restaurants and everything else, even some convenience stores, it's getting out of hand because they're so scared of the surcharging word. And it's like, oh, well, I could do this instead of surcharging because I got in trouble with surcharging. So let me do the convenience fee or the service fee. When really and truly, like you said, Visa is now seeing what certain merchants are doing, and they're cracking down on everything altogether. Like, no, you cannot do this at all.
Soapbox moment for me as well. Like, as if I'm never not on a soapbox, right? I've even seen in a couple of cases where, and it happens most in the utility space, where there's a convenience fee. And either it's not the merchant collecting the service fee, it's some third party that's collecting on behalf of that's charging the convenience fee, which is already a no-no. But also, what I've been suspect of, and I wonder if Visa is going to find these providers and immediately crack down on, is convenience fees are not supposed to be charged on any form of recurring payment. Basically invalidates it being a convenience. That just means that you take that payment as a payment channel. It's not a convenience. So I have been suspect that the way that some of these providers get around it is they're typically PCI level 1 and they send transactions as Moto Ecom, like an ECI type 7, instead of sending the payment as a recurring payment. So through the Visa network and through the authorization networks, it looks like one-time payments being made every single time, even though the customer is paying a recurring bill. And I think Visa should crack down on that because that is not cool to be charging that. You should not be doing that.
No, it's not. And it's like you're taking advantage sometimes over on the consumer for your own use because of what you're being charged. But I mean, at the end of the day, you have to be fair across the board.
And I think that's a very interesting topic. And what it makes me also think about is about the role of Visa compared to the acquirer, because we've been recently seeing Visa also in Europe very active, going to see merchants and forcing them to get into compliance. We've seen that with the co-branded cards in France and other markets in Europe. But in general, I think Visa is having a much more active role and going directly to see merchants rather than going through the acquirer, which is the traditional and even the standard channel to deal with merchants. So what do you think? Do you think that this, in particular, not really all networks, but in particular Visa, is somehow replacing this role that used to be at the acquirer level? Will that change the relationship with the acquirer? Because I feel like the acquirer doesn't really manage and handle the risk and all the compliance, where's the acquirer role?
That's a good question. I mean, typically when I've seen the networks crack down on enforcement, they don't immediately go to the merchant level unless it's like egregious or the merchant is very large. Like, let's say you are an embedded finance company or an embedded ISV, right? And let's just say like you provide services for people who cut lawns, right? Like you're the payment software that all of these landscapers use. It's much easier for Visa to find out that there's something wrong at the ISV level and then hit the ISV who then downstreams everything because in the US, right, there's millions of merchants. There's no way Visa can follow up on compliance on that. The only way that typically Visa does, and it's almost like they're doing it to set traps for people, is they enhance the requirements, right? They'll say, oh, you need to send an extra surcharging flag, or you need to send data this way. And then it's much easier for them to go and check the data and be like, oh, all of these flags are missing, but we have a secret shopper who said that they ran into this merchant who was surcharging. Okay, so now we know that they're absolutely out of compliance. We run into it. There's every now and then a merchant tells us something and we go and we check the data and we're like, that field is blank.
Even in Europe, I've recently actually come across some merchants that they know they're not compliant. They said, we need it because our margin is very tight, so we need them. And yeah, so they're even aware of it and listen to it.
And that's crazy because surcharging is prohibited in continental Europe. Well, I could literally drone on for like multiple hours on this topic, but it is a good segue to our main topic, which is looking at the unintended consequences of regulations. I think we all enjoy regulations. I think that they keep a lot of consumers safe. But one of the challenges, especially in the world of payments, is these regulations are almost never informed by experts who can maybe look into potential scenarios in the future where we could potentially see unintended consequences. And, you know, our main topic here is really what we were looking at, some interesting analysis from some other players in this space about how local card schemes in Europe have actually been negatively impacted by um, regulation.
Yeah, so maybe to give some some context, some reminder about what this regulation in Europe was originally supposed to cover, and the idea was to reduce cost, as simple as that, because it was considered that car was had become at that time like the natural substitute of cash, especially in the Nordics, and that was even the best way. The card was the best way to fight against corruption, money laundering, and so on. So it was like, let's push for cards, but let's make them less expensive. So let's put a cap, especially on the consumer type of cards. But now what we're seeing after 10 years of that regulation is that local schemes are really the victim and are suffering from such regulation because basically they can no longer compete. They don't have enough money to compete with the global networks. And so that's definitely the main consequence is that they don't have enough money to compete against Visa, MasterCard, because those international networks are generating their money elsewhere, so they can invest in new technology, they can reinvent the market, while the domestic networks are simply following as much as they can, but losing market share. And at the same time, I would add also that we've seen so many APMs, alternative payment methods, just appearing in Europe for the simple reason that they are not regulated. So what does it mean? It means that, to me, it means that when you regulate and you don't think about the potential consequences, you might be killing a good market, you might be killing your local market, and you're actually, without doing that on purpose, you're encouraging other solutions to just come up and to be much more expensive than the car used to be, with APMs at 2, 3, even 4%. So it's, so at the end, we are still far from those APMs or the global networks to replace the local networks where they exist, like in France or Germany. But how much time do they have until they are completely replaced by much more lucrative payment methods that can offer value added to their customers? Because at the end, that's what happens. If there is no money at the issuing side, the interchange is so low that in Europe, we don't have any rewards. There's nothing.
Mm-hmm.
So yeah, those are my
Totally.
figures.
I mean, my thought too is that, right, you have these interchange caps, right? And who did they primarily negatively impact? They negatively impacted the global brands. So when you shrink the delta between a local network and a global network to just, a basis point here or 2 basis points there, for the majority of merchants, that's like, okay, well, I'm not going to go through and support a local network because the cost differential isn't that high. So I don't need to support them anymore. And it's, it's also co-branded with a Visa or a MasterCard logo on it. So I can say use my Carte Bancaire Visa card, right? Like I can use either Carte Bancaire or use it as a Visa. So it's like, well, why then have to support Carte Bancaire at all if the delta between Visa credit and Carte Bancaire is only 1 or 2 basis points? My other thought is, right, if you're a local scheme, it doesn't really help you to be significantly less costly than your competitors, right? If, global brands credit are regulated to 30 bips, they're going to charge 30 bips. But if you're only charging 10 bips, well, you're already being suffocated, but why be so cheap if everyone has to get charged that rate? You might as well just start increasing your scheme fees or increasing your interchange, because it doesn't really help you to necessarily be that less expensive. And then my third thought is globalization, right? Let's say you want something from a US company and they do not have payment methods that support your local payment method, right? You're going to have to use the global brands. So, it's almost a weird position of, looking at where your customers are from and where they're shopping from, because yeah, it's easier for you as a global e-commerce company to be like, oh, well, I'm not going to focus on these local payment methods because everyone can pay me with a Visa, MasterCard, Discover, Amex. I don't need to support this card out of Italy or this card out of Norway. Doesn't make sense for me. It's time investment and integration effort. And
I would agree there, but another consequence of that regulation was the prohibition of the surcharging, which is, following the same trend, which is if you cannot differentiate payment methods, then you can not incentivize some other payment methods. And for that reason, somehow cards are being killed, and especially domestic cards, because there's no value, at least for the customer, for the payer, who is at the end, who is deciding the way they're using to pay. There is no incentive at all for us Europeans to pay with any of those cards. So I like, for example, if they propose me any new wallet with rewards, with night services, I don't really mind if it cost 3% to the merchant. I would use it, and the merchant couldn't really surcharge me for that. So, it's, I think.
Well, is this not the crazy thing about like APMs in Europe, right? Like the buy now, pay laters, merchants are jumping way on board with those, and those are not capped at 30 bips.
They're not capped at all. So PayPal is not capped at all, and it's replacing in Germany, a country like Germany, which is very cash culture, and is really low cost, low fees of cards. And PayPal is just growing so fast. And the same in Italy, because they have something else to offer than GiroPay or how was the name? Pago Bancomat in Italy. So yeah, there's no value for those payment methods other than low cost for the merchant. So as a payer, as a customer, you don't use that.
Yeah, and I mean, let's like flip this over to the US side, right? We have one major piece of legislation in the payment space, right? The Durbin Amendment, which regulated the cost of debit cards down to 5 basis points and 22 cents, right? Super low cost form of payment. And really, at the time, debit was like the fastest growing payment method. But, you can go and look and see how much money the banks have now started to spend on rewards and upping their rewards card programs and getting more partners in the reward space and paying financial influencers to do videos about rewards cards and the benefits that they bring and why everyone should be using a rewards card, because it's free money. It's never free. If you think that you're just getting 2% cash back, someone's paying for it, and you probably actually paid for it in the price of goods because the merchant increased their cost. But I think that's like the unintended consequence of that regulation, right? Banks wanted to recoup the money, so just put all of your efforts into getting people to switch more to credit cards instead of debit cards. And I think our data shows that, at least for a lot of our merchants, debit card penetration has slowed. And not only that, I think we spoke about this in the rewards card episode, which was it's not just even that reward, like the volume of credit is growing, it's the volume of the highest cost credit cards is growing the fastest. And I have to believe that was an unintended consequence of the regulation, was that banks just shift their focus.
Yeah, I always think of a couple different stores. And also the other thing I think that came out around that time was we saw a lot of rewards type incentive store cards, right? Like Starbucks was a great example because Starbucks was actually going to be, or anybody with a small ticket, not just Starbucks, right? How that Durbin Amendment was going to affect them. And probably a great use case. I would have just used my debit card at Starbucks or any coffee shop, and Starbucks rolls out this rewards quote card that you preload with a larger transaction amount, with a larger ticket amount, right? And then in turn, they don't get hit with 10, small ticket transactions. I do a $20 load and I use a more expensive credit card, but it's one time. And so that one came out, I think, about the same time Target and some of the other stores were really pushing their own debit cards that would link to people's checking accounts, right? And in tying in some type of rewards. So the people who couldn't do that were small businesses, right? They didn't, or if whoever has, transactions coming from those smaller banks where the Durbin Amendment didn't have to take effect either. So sometimes I don't know if true people or the true, companies that it's intended to help, if it actually helps them either.
Yeah, well, I think we discussed this in our payment options for small business, right? They never got the benefit because you have certain players in the space that say they put everybody on a blended rate and they say like, oh, it's for all the other aspects of us helping you manage your small business, right? They just skirted the regulation by saying, yeah, we're charging a blended rate on debit cards. We're not honoring the actual regulated rate because this is a part of our fee is not just for processing payment. So, even then, it's like you hear this vociferous crowd of small businesses being like, it's just too expensive. And sometimes we kind of step back and scratch our heads and are like, yeah, but you're probably primarily debit cards, so it shouldn't be that expensive for you. Till you talk to those owners and I have friends who have small businesses. I see, what they're using and I'm like, wait. You're paying like 1.85% plus 30 cents for a debit card? What? So I think that's, one of those situations where when you create these regulations, there's always going to be unintended consequences. And I think this is kind of the regulatory seesaw, right? Where you see a flurry of regulation that maybe is stricter than it needs to be, and it, potentially stifles business, and then it backs off, and then the people who are smart enough, who know how to game the system, then take advantage of the lack of regulation, and then they squeeze other players out. And I think that's, at least the data that we were seeing from, that other industry player was really showing, which was, in Europe, the local networks are being squeezed and they're potentially getting squeezed very, very hard. And I don't know, you guys can correct me if I'm wrong. You guys are there, right? Like, is there also some sort of generational aspect into local payment methods? Like, do Gen Z Parisians care that their card is a carte bancaire, or
No.
oh, like, about
You No, they, of course, we have the alternative payment methods. We have more and more. You mentioned, for instance, the reward cards, but we have also an increase of the use of Amex also, which is penetrating also France. It's not as in the UK, of course, but we see this kind of card also being used. But no matter even before, people were not really aware of being having a co-badged card or not, because the first application when they enter the card in a post system or something like that, they were not really aware, even if the debit card is the most used card in France, but they're not very sensitive to that. However, the merchants have seen, especially one French bank, which has turned its corporate cards into full Visa cards, and they have seen the increase of the cost, the subsequent increase of the cost. So, but apart from that, they're not really aware.
I love that you just gave that bank every gender.
I'm sorry.
This is the beauty of having international colleagues. Yeah, I mean, it's so fascinating to see like these also like regulation tied into generational trends as well. And I mean, to be skeptical, right, is it truly all regulation, or is it some portion demographic shift that's also squeezing the networks, like these local networks? Like, it's really hard to say and tease out that particular data, right? Because the only people who are going to have data on this, due to obviously kind of GDPR, is the issuers themselves, of being able to say, well, yes, we're seeing less of these payment methods requested by our younger customers versus our older customers. So, like, it's a very interesting take on what's being shown with the squeeze of these local networks, but also potentially a grain of salt is there a demographic portion of this shift as well that's also in play, and how big or how small is that demographic piece playing into also the regulatory squeeze out of these local networks? Because Europe doesn't seem like the type of place that wants to squeeze out its local partners in support of companies not from Europe. Tends to put the spurs on a lot of U.S. companies that do business in Europe, right? And a lot of times to a lot of great success. So it's like, did you guys miss this one when you came up with your regulations that you might accidentally harm? And it'd be interesting to go back and read around the time of the interchange regulation in Europe what local banks and local schemes were saying about it, right? Like, were they on board with it, or were they like against it, saying like, hey, this could actually hurt us in the long run and you're not paying attention to us? But with our short attention spans, we tend not to like 2015 sounds like ages ago as far as I'm concerned. Like,
Truly.
no. And that's how old some of these regulations are. I mean, Durbin is like what, 2011?
Yeah.
I think this kind of became effective. So hard to remember all of the complaints at the time. Well, I think that's our show for today. Thanks everybody for listening. So glad to be back. We're excited to pick the pace back up and be on our regularly scheduled drop date for at least until maybe next December, when we all decide that we need breaks again.
Yes.
All right.
2025.
Thank you.
In your own.
Bye.
Bye.